Yo, what's happening, people? Hope you're all doing well. This video is going to be really a lot of value to be had in this video. So it's going to be going through EU, and we're going to be on the 15-minute predominantly, but using the hourly as well. But the point of this video is to show you the power of 15-minute areas, combining that with the hourly. So I'm going to go through starting from current price, or where price is here, which is the 27th of January, and I'm going to mark through my supply and demand zones and where we would be looking for entries. Now, although we are on the 15, it's also important to understand what the hourly is doing. So obviously we're bearish, we're putting in lower lows, lower highs, we're in bearish order flow. We've seen a mitigation of this area here. We've then impulsed down into a new low. And look, now the hourly is super bearish. The 15-minute is going to more than likely provide a lot of areas of interest of supply, where we can look for entries and really just follow the 15-minute supply and demand, what it's showing us, where's the highs and lows, and then as I said, combining that with the hourly. So I think this will really open your eyes, and you'll see a lot of why price is doing what it's doing, and all the entries that are available when you really know what you're doing. Okay, so let's go through it. So obviously this move put in a new low, nice momentum. So straight away I've started it on an area of interest, so we've got a nice area. So for me, this pushed into a new low, and I would be looking at this wick and the candle that goes back up, or even that wick, but I would be looking at that, and if price comes back into that area, we can look for entries. And I'm not going to be going into a 1 minute or a second's time frame for entries. This is purely showing you where we can be getting involved in entries. So all of these areas we need lower time frame confirmation, as you already know. So going in, you can see we tap in with it into that area straight away. Okay, we mitigate, and as we are on the 1 minute, price come in, so that we wouldn't really get an entry unless you're looking on a 5 second or a 15 second. But let's carry on. We come in, we mitigate with that wick. So the next area, I'll be looking at that wick there, and potentially hit this as well, just so we've got a nice area to work with if price comes in. The reason why I'm looking at that wick and this zone is because it's not mitigated. Okay, so we've got a nice area. See what price does. Just going to go through it. Okay, we've gone down now. So I've missed an area. So we had a range. Price ranged around. Okay, we did take the low, but then we got momentum, a bit of momentum on that candle, and we have an inside bar. Price come back into that, and then we showed momentum. Next area, we have another area of supply. We can look for sells. Obviously, always referring back to the hourly. What we seeing? That we aren't putting in much structure. So we've got a swing point down here, and really, these aren't pullbacks. Little pullback here, but a swing point is up here. So that means we're really bearish, and the 15-minute is just showing exactly that. Let's carry on. Let's see if we can get a nice tap in. Okay, no, we don't. We go lower. So the next area. So we put in a low, we pull back, range. So we have a 1, 2, 3, 4, 5, 6 candle range. Then we put in a new low. So that is a new area I'd be looking to get involved with. Price come back in to mitigate. Let's see what happens. And I haven't actually been through this price action in about 2-3 weeks, so I'm not sure what happens. Okay, but I would be looking for sells here, and if I get taken out, or if I take a break even, then what I'll be looking at now, depending on how we break this high, I would be still looking for entries here for sells, because we may use this higher for inducement and clear of liquidity, or we may push up impulsively, mitigate this, and then that would form a new area of demand down here to get long from. But then again, the hourly would still be bearish, but we can still take it, and could be a short-term play. We don't know. Okay, so we've come, right, we haven't broke it, maybe by a hair, but you know, entries inside there, and you can see what we've done now. If I just put on an arrow, we've taken the low, so that means we've got another POI. If you're new to the strategy and you're wondering why I'm looking at this candle, this candle, this candle, revisit the content because you'll understand. Okay, this is our bearish zone creation, last up move candle before the down move that broke the low. Okay, so we've tapped in. I do believe this was a trade I took, or I was looking at this at the time. Nice mitigation there. Now we're ranging. Right, straight away what I'm seeing is weakness. You can see we're ranging. Previously, look, we had momentum. Obviously we had ranges, but we're seeing the same thing here. Looks like price is failing to go lower, but let's see. We may just keep going. Right, ranging. Now, although we are ranging, we are still bearish because supply hasn't been broken. Okay, we may come back up to test it, but if we don't break this supply, then you know, there you go, we're still bearish. Okay, so back to the hourly, what are we looking at? Okay, let me just go forward one candle or a few candles. Right, so the hourly, we've now put in a new low, but we're starting to see wicks. So the 15 minute, we've now had another area of supply. So we had a pullback and a new low. So I'll be looking at this candle, and we've come into it. Right, so what I can see now is we've actually taken out that supply and that high. So what this could be, although it's just wicked it, you know, price action tells us everything. On a lower time frame, that's a break of that high. So what we may see here is a tap back into that area of demand, and we may see this low hold because we've potentially got a strong low here. So we come in, right, and then look, we take the high. Obviously we can still mark on this area as well. Obviously it's an area of supply, but we need to understand what's going on below. Price is failing to go lower, and then we impulsively push up. So looking for sales here is still okay, but then you wouldn't be taking any entries anyway because of the momentum. But understand it all started from here. We come in to mitigate, but we broke supply. This low was then protected. We took the higher, we come in, we can have seek entries within here. Okay, go forward a bit. So the hourly, obviously we had this as our most recent lower high. We've now broken that with momentum. Okay, so we've broken with momentum. Let me just hide that on the 15. Okay, so now we need to understand the hourly could potentially now be bullish, but we don't know until it commits. So what this may be is an impulsive move up to come into an area of supply, which is then also seeking liquidity from the lows, from anyone that's in sells. When we know that this is actually a confirmed new trend on the hourly is when we either come back into mitigate or just pull back with nice, you know, solid structure, and then we actually put in a double break. That's when we get double confirmation and we actually have a bullish trend change. But going back to the 15, let's continue. Right, so obviously inside bar, this is the last down move before momentum kicked in. Demand is now in control. One thing to note as well, this is why using the hourly and the 15 as sort of partners, is good, because if we look at this break on the 15, it's just a wick that broke, but on the hourly we know it's an actual nice break. Okay, that's a nice reference for us to use. So we can see price delivery back into this area. Oh, we can look for entries in here. Okay, and probably get a tap in, so we can look for entries. What happens next? Let's see. I believe this was near spread hours. Yep. Let's just go forward a bit. Again, filtering back to the hourly. Okay, so we put in a new high. We've now pulled back. We've got some nice structure, so we've got a new high, and then we've got a low, which is here. So if we are going to remain bullish, we won't need to see price come lower than this, where momentum kicked in and where supply failed that created this demand. Okay, and we've now taken out the high. But what is that? So we have this area of supply. Now this is where it gets a little bit interesting and a bit confusing for some, because people would be looking to sell this from here, and you're not wrong to do that, but understand that demand is now in control, and this may be, we may tap in, give lower time frame entries, but it may just be an inflection point for price to mitigate, react, build liquidity, range, and then come off into an area of demand which may be here, or the extreme somewhere down here, before then going higher. Or we may just react a little bit and then go higher. Okay, you need to understand what current momentum is and what previous momentum is. This is previous momentum and this is current momentum, with price moving from demand to demand. So 15-minute, we come in mitigated, and another sort of point to note here as well. These two candles took out the high, but what you can notice is we've already come back into mitigate with this wick. So we had this candle with nice momentum, but then we actually come back into mitigate that candle, then we took out the high. So I would be seeking entries from here, but on this wick, because that's the unmitigated area. So that's not, this wick hasn't been mitigated once price come up here, but now it's obviously trading inside that. So it may hold, or you may, so yeah, look, that would give us lower time frame entries, and then the high doesn't get taken out, and then yeah, okay, so we go lower. So that may be a break even, maybe a loss. I'm not too sure. Right, but carrying on, back to the hourly. Right, so this is the new high and the new low. That's the new low. Will we see price come right down into that? Let's go back to the 15. Right, let's continue. Let's see what happens. Right, so what have we had? Well, surely you can see that price come in, and we had this move up. Obviously, this was, we had spreads, then we had, yes, this is 11 p.m. So just during, pretty much midnight, price come up, took that high after taking, so this low here was just about taken out, and we put in a new high. Price come, pulled back, new high. So we have two areas that we could look to get long from. Price didn't respect that area, and it actually come lower into this inside bar. But as I say, the wick that comes back is here, so that's not mitigated. And price comes into that, also taking liquidity from buyers up here from these areas of demand, and then boom, we put in a new high. And then the hourly, you can see We've now broken a new high. Break a structure. Back to the 15. We can mark on the inside bar, this wick. That's our next area. Okay, let's continue. Right. Next area. This candle. Or you can take the wick, but I'd be looking at that whole candle. And you can see, look, if you're wondering, we've put in a new high, pulled back, and we've put in another new high. So we don't need to wait for this. We can now trade this. We don't need to come down here. Let's see what happens. Right, so we have the exact same thing. And this is something you need to do yourself. Go through your charts, do what I'm doing. Don't go to your lower time frames like the 1 minute. Just use your higher time frames. Plot on your POIs, and you'll learn so much. Right, so next POI. This is when it gets a bit next level. Because what we can see, we put in a new high, but we have wicks. So although we can take this inside bar, we do have wicks here, and momentum kicked in here. So I'll be looking at this and this candle, but let me take this one and see if we get, yeah, so we come in, and then I'll be looking for entries once we tap in. Alright, next area. This one's pretty simple. We just have momentum kicking in, last down move. Again, you can use that candle, but it's all preference and what you've seen in your testing and your experience. Let's see what happens. Now, some people will be looking at this thinking they would see price keep putting in high highs, but then they would be waiting for this or this, and that they would miss out on these trades when really price don't need to come here straight away. Okay, so what's price doing now? Ranging. Do we come into this area? Okay, looking like we're putting in. Right, okay, so we didn't get an entry in this new zone. Price come in, and we don't really tap in, but that's fine. Doesn't need to. It's all good. Back to the hourly. Right, you can see how beautiful structure is now on the hourly. It's just so bullish. Okay, right. We now put in a new high. BOS, and this is why it's good using the hourly and the 15, because you can really trade what is clearer and what's cleaner. Because on the 15 minute, you're looking at this area thinking, what candle do I use? This one or this wick? But on the hourly, it's sort of pretty straightforward. We have this candle, yeah, and then 15 minute is sort of the 1, 2, 3, 4, 5, yeah. So cross-reference both time frames, and I think you'll get a better idea of what price is doing. Right, it's 15. Okay, so we put in this high, we range, and then we take out the high. Right, this is when it gets a bit interesting, because we have an inside bar before momentum, but then when we look on the hourly, we can see a very clear area here. These areas on the 15 that we just went through here, we don't really have a clear hourly POI. We have this wick or this doji candle, but we have just bullish candles really, and sort of another area to look at as well is this candle that I didn't show you on the hourly. That candle, just go back. Okay, so whereas on the 15 minute we was looking at this candle, we didn't get tagged in, but on the hourly, this is those 4 candles, and we did get tapped in. Okay, that's why it is good to use both time frames. But yeah, carrying on, 15 minute. This could hold, it may not. We may come lower into this hourly, and really I would prefer it to go lower, so we can just sort of sweep out these lows here. and come into this hourly area. And obviously I know that that's what happens because this was only a week ago. So, but let's see. Right, so we're coming close, and then boom. We come in. Obviously we're looking for our entries on lower time frames. We've taken out these lows, this liquidity here. And if we want to be a bit extra, we've had a bit of inducement. So 5-minute inside bar, which is on the 15-minute. That's basically that wick, okay? What did price do? It come in to mitigate that. It reacted, built liquidity, but then come lower into the extreme. Okay, so a few little key details there. And then eventually we do go to the moon. So let's go to the hourly. Hide that. Okay, so we range around a little bit and we do take out the high. Okay, so another break structure. Back to the 15, anything we can see. Okay, so we have this wick. That's the wick that's not been mitigated before price then pushed up, break structure. So let's see if we come back into that. Alright, not quite. What was the hourly looking like? Yeah, so we wouldn't have been tapped in. Carrying on. Alright, inside bar. Wick that comes back. I'll be looking at that. That's another POI. Obviously we're very bullish now. We're just continuing going up. Okay, so looking at that area there, which you definitely can take, but then again, understand on the hourly we have this as our high and this as our low. Okay, so we do come into a discount ever so slightly, but there's always the possibility price can come lower, because on the hourly we can see a wick, and when we're looking at this, it hasn't been mitigated. Also we can, yeah, so one thing I didn't mention, we have to understand what's caused the break. So we can see is this candle that's caused the break into a new higher high. So that is this down candle, okay? That down candle, this would be the extreme demand on the hourly, and then these are sort of areas you can look at. You can definitely take it longs from here because price don't need to come here, but we did have news come out which took this right down to the bottom, I believe. So yeah, you can definitely take these entries, but again, using both time frames. All right, let's continue. And look, more times than not, we will get a reaction from these sort of subtle demand, 15-minute demand zones. So worst case scenario, well, not worst case scenario, but you know, you can take a break even easily without taking a loss before getting involved in the extreme down here. Alright, so let's continue, see what happens. Building liquidity before the news, which I believe, what time was it? Let's see if I find out. Let's go to the hourly, see what happens. Right, so we're reacting from this area. As I say, we're building liquidity. And then news come out, was it 1:30 or 1? And yeah, so if you're taking entries from here, you know, it's very valid, but you can see that the hourly, this is why price come this low, because this is what caused the break and it ain't been mitigated. Okay, it's really, when you understand it, it's really simple. We're just following the order flow and using both time frames. You can see all the opportunity we have, and it all started from here. We had this impulsive move up, showing signs that price wants to trend, but not confirmed until it's actually confirmed. So we come in, mitigate, new high, price comes to the extreme, new high, momentum takes over on this leg. Okay, so from this high to this low, momentum sort of steps in. So this is when we can then drop to the 15-minute and say, right, okay, the hourly is moving aggressively. Are there 15-minute POIs that we can take advantage of? Because the hourly might not get mitigated. Okay. And then carrying on, we then break into a new high again. News related. That's why we see large momentum. And obviously we can eye that up as a POI, but then this demand was formed by news, so I don't really like taking them areas because they haven't got a high probability of holding. Then it's not to say it's not valid, because order flow is still intact, so it can come in, or it can come into a discount and we can still trade that. Okay, back to the 15. Okay, so let me just go back. I think I missed. Right, so yeah, so we have an inside bar. It's not really a pullback, just one candle. Let's continue. Okay, so we've now had three candles sort of inside this candle here. So a bit of structure. We then put in that new high, so we can potentially look at this. But understanding on the hourly, we are very overbought and we are sort of in a premium. That's not to say it can't mitigate and continue. Let's see. Okay, so we had another area here, inside bar. Counter trend candle, more momentum, inside bar. And then do we take out the high? Not too sure. Yeah, so we take out the high, so that's obviously another entry there. Now, if you're wondering, when I switch my sort of thought process to this zone to this zone, really, when we break here, I'm looking to get long from here, but then I'm seeing, right, bearish candle, then a counter trend candle, momentum. So then I'm flipping my thoughts to this zone and looking for entries here. I'm not thinking, right, is this going to be used as inducement to go lower? Because it doesn't need to be, okay? We can still put in a new high from here. And when we think about it, so if we come in, we have 29 pips just to the high. So let's say 30 pips. So if we're using a 2 pip stop loss, that is, what's that, 15%? If my maths is not wrong. And that's just to the high, 15R. So that's pretty crazy. Okay, going back to the hourly. Right, we've put in structure, 6 to 8 candles as a minimum, and we've broken into a new high. And then 15-minute looks a bit, it's not really clear where our POI would be, so this is when I would use the hourly and look at this, the last down candle, which we can see is here, but then the wick I will take into consideration as well. Price comes in, and do we hold? Right, so we come in, entries on the lower time frame, and then again, so what is that? So from the demand to the new high, yeah, 29 pips again, so 15%, well, pretty much, and that's a lot of percentage. Obviously, one thing to note, we won't always get lower time frame entries. It's just not realistic, but when you focus on the larger sample size over the month and 3 months, 6 months, a year, it's a lot of percentage and there's a lot of entries. Okay, carrying on. Okay, so now we've got to a bit of price action where we've had the news, we've had a lot of bullish price action over the week. As you can see, look, demand is in control of this market. That's very clear to see. But now, what we've had, if you go to the hourly, okay, when we put in this new high, we had a new low. So we got a high and we got a low. We've now broken that. So let's look at the 15. What has caused it? What's caused this breakdown that's broken this low? Oh, wrong tool. Okay, so this low, what's caused it? Is it this candle? Well, firstly, no. Secondly, that's been mitigated. It's nothing relevant at all. So it's not that. It's this candle, and more so this wick. Or that's what's caused it, but that is yet to be mitigated. So this is where price is likely to come back into if supply is going to now take control, and we're going to see a flip from bullish order flow to bearish. Because for all we know, once price impulsively moves down here, we could be seeking liquidity and mitigating this or this to go higher. That's why we wait for the double confirmation on the hourly, or for you it may be the 15 where you wait for double confirmation. But whatever it is, you got to test it, and that's the only way you're going to find out, you know, your edge. But let's continue, and we can see, for me, although I'm looking at this candle, I would actually take into this wick. I would take this wick into consideration. So we've got the range, these two candles before momentum kicked in. That's for me what I've tested, my preference, and then price hasn't come in yet, and then we've put in a new low. So looking at this, is that a valid area? But let's look on the hourly, see what that's saying. Okay, so the hourly, we've put in a low, we've closed below, we've got a high, so a low and a high. Now, the full process going forward from here would be, if we take out this high, then this move down that caused the break was just a seek of liquidity, and then a mitigation of demand, which could have been here or here, wherever. But if we don't break this high, and we come into an area of supply, and then we put in a new low, which would be below this, then we've now got a flip of order flow. We're now bearish. Okay, so let's see what happens. Okay, so we come into that candle, we don't. Right, okay, so this is again why the hourly always come back to it, because we have an inside bar, a wick, and price. It doesn't come in, but it's pretty close. So what's the 15 minutes saying? Right, okay, so delete that off. We had this as our first POI, and then we was looking at this as well. Okay everyone, so as I was saying, we come into this upper supply zone here, and we did have this as another POI as well, but I can already see that the lower time frames would not give us an entry here, and instead price, lower time frame demand was in control, and then this high was used for inducement. Okay, and market open, we gapped up here, taken a high, and then we've then sort of respected it and come down. But I want to go to the hourly, because from here onwards we do range, and this was the week of price action we just had. But I want to show you what happens. So we eventually take this low out. Okay, so at this point here we've now got a confirmed trend change. Although it is rangy and it is a bit messy compared to momentum here, we've now took out this low, and we've put in a double confirmation. So continuing on, what happens next? We have a low, if this is going to work, so we have a low and a high. Okay, so I would mark that one as my high, because we range, clear pullback, and then we put in the low with this move here. So looking to see what price does. We come into that area and we go a bit higher, but we don't go above it, and then see what happens. Right, so obviously we're ranging. Okay, and then we don't take out that high, and then we impulsively break the low, and then we go up. So when I see this happen, so we've had, firstly we've had this huge range pretty much all the week, and although we did have inside of here bearish order flow, it's still very corrective, very rangy, range bound movement. Then secondly we had the low, so all the lows taken out, so the this low, this low, this low taken out impulsively before we then wick back up, and then thirdly we take out the high. So where the high was here, the highest point before the range, we take it out. So when I see this is sweeping liquidity from both sides, and then going forward, prior that the markets have more chance of now trending because liquidity has been swept, and you know we're good to go again potentially. But let's see where current price is. Okay, so this is where current price is. Obviously I've marked on my POIs. This is what I'm looking at for the week ahead. So I'm looking at this as, right, so we've taken out the high, we had the low taken out, we've then put in this corrective messy low below this, we've pulled back and we put in a new low. So we're trending down. So I'm looking for entries. I've got my hourly POI, the inside bar, and the 15-minute area as well, which should be here. Okay, that, yeah. So this candle here I'm looking at, and then obviously the hourly area as well. So yeah, what I'll be looking at, see if price can come in and go lower. And really it's as simple as that. I'll be looking for lower time frame confirmation at this area. One thing price may do is open, sort of correct around a bit, and then break again. If that's the case, I'll be looking at that new POI, and then be looking to get involved. So yeah, that's going to do it. I hope you found a lot of value in that video, and this bit of price action was a really good example. Now obviously we're not always going to get trending markets like this. That's why we've got two sort of approaches to the market. We have when price is like this, trending, given lots of opportunity, and then when price is sort of, well, even this bit of price action where we're a bit rangy and we can just play it from supply to demand, and even trying to find an example, yeah, where we're like this, we're sort of breaking highs, breaking lows. We can just play the POIs, so the supply and demand areas, and just sort of play ping pong really. The areas here for demand, areas here for supply, and obviously trending markets like this and like this is what we want, but we're not always going to get it. So understanding both markets, you'll be really well off, pretty much. So yeah, any questions you have on this video, let me know. If you took value, let me know, and I can make some more like this where we go through some more examples. Just let me know what you want, and yeah, have a good weekend, and I'll see you in the next one.